Good morning. Thanks so much for tuning in. This is Buy Now, Sell Now on ET Now. My name is Alex Matthew. With me is Cheryl D'Souza. We'll take you through the next 1 hour of trade. And we've seen a bit of a choppy start to the day as far as Indian equity markets are concerned. And this is sort of leading from yesterday's choppiness that we saw. As of now, the benchmark indices are trading more or less unchanged, flat. You have the Nifty 50 that is defending the 15,000 mark. Really, the story of the day, though, has to do with the metals counters. And let me set the context very quickly for you. You had the Federal Reserve, the minutes of the last meeting of the Federal Reserve come in overnight, and in it, there was perhaps to a certain extent a change in the tone where they said that if the economy in the US continues to improve, at some point they will have to have a conversation about the purchase, the rollback in asset purchases. So that is something that has roiled equity markets in the US and in the Asia Pacific region, and that has caused a cool off in metal prices that we've seen have had a secular uptrend over the past several months. So that is the context that we're talking in. The metals pack currently trading with cuts of about 2%. It was significantly lower earlier in trade. It's regained some ground. But let's quickly go on to the stocks that are in focus. Cheryl, what are the stocks that you're looking at right now? Good morning.
Good morning, Alex. Fertilizer pack is the one that is in focus today after the subsidy hike. So be it NFL, be it RCF, be it Deepak Fertilizers, we're seeing all of them surge in trade. So fertilizer stocks, apart from metal counters, are in focus in today's trading session. JK Tyres, strong earnings coming in for that counter. You're seeing the sharp uptick. Along with that, you have IEX that is seeing a sharp downtick in trade. This is after 5% equity block deal that took place earlier in the day. TD Power is moving on back of its earnings. It's lower in trade. Cipla has launched RT-PCR test kit, so that is why Cipla is in focus in today's trading session. Endurance, another counter that is moving on back of its Q4 earnings. Z and HPCL, both of them will be reporting their earnings later today, so both of these counters are in focus in today's trading session. But apart from these counters, you also have Jindal Stainless, which reported its Q4 earnings. And if you look at the numbers, the PAT has come substantially higher on a year-on-year basis. The PAT is coming at around 226 crore rupees versus 94 crore rupees on a year-on-year basis. You've seen a sharp uptick come in the margins as well. The margins were at 13.2% versus 8.6% a year-on-year basis. Revenue seeing an uptick of 36%, coming in at around 2,758 crore rupees. I stand corrected on that particular front. So to talk more on the earnings front and the way forward for Jindal Stainless Hisar, we are joined by the management, Vijay Sharma, who is the director at Jindal Stainless Hisar. Good morning, Mr. Sharma. Thank you for joining us on ET Now. Let's talk about your earnings, and you saw a doubling in the EBITDA on a year-on-year basis, and that is a testament the way the metal prices have moved over the past several months. But what were the average stainless steel realizations in the quarter gone by?
Namaskar, good morning, and thanks. It's always nice to be with ET. Well, yes, the results have been satisfactory, quite motivating to perform even better. And like you rightly said, EBITDA more than doubled Y on Y. PBT in fact 6 times Y on Y. And there are multiple reasons for that. I will start with the internal reasons first. These were operational efficiencies and customer service, various marketing initiatives like branding and things like improvements in supply chain and deleveraging the balance sheet. And yes, in the external environment, the pent-up demand, recovery and revival, and many of the segments really doing well. So all put together, the things are better. In fact, Y on Y, yes, things are much better, and even consequential Q also, we have done better than Q3. So we are very hopeful that this performance is going to sustain. However, I would like to have a comment on the stainless steel industry in India per se. You see, last financial year, the stainless steel industry degrew by 19%. In fact, generally speaking, industry like stainless, they work in alignment with the GDP. It is about 1 to 1.5 times in the aligned with the GDP, but Indian GDP, while it is expected to be degrew by about 8%, but the drop in stainless steel is very high. Despite of the fact that you would have seen that in case of Jindal Stainless SR, it is hardly about 4%. That means there were certain other sectors which got a beating, primarily because of COVID and also because of withdrawal of the level playing field in the union budget. These are the MSME sector. Despite of that, since this financial year, we are expecting the GDP of India to be anywhere between 10 to 12%. We really have to see, because this wave 2 was perhaps not factored in this GDP. But still, looking into the historical evidences, I think the stainless steel also will be growing not less than GDP, rather maybe 1.5 times of the GDP. So there is a big opportunity emerging. Apart from that, there are new opportunities like the healthcare and the medical aid and the equipment for the hospitals and other new segments like defense and all. Those are emerging. But yes, for the MSME sector in the primary producers area, which is quite a big number, close to 35%. If this level playing field is not available, this is likely to create the issues for the stainless steel industry as such. While we are quite satisfied with the profitability, but you see, if I compare the stainless steel profitability with other metals, perhaps we are 1/3 of the average steel industry profitability. That means there is still scope, and this is also because more than 20% of the stainless steel consumption is from imports. That too from the countries, basically China, and also ASEAN countries where there is absolutely no duty, and the cost of competitiveness of India, which makes us uncompetitive by 10 to 12% only because of cost of capital, also because of logistics. So these are some challenges, but since we have got a good presence in various segments, high-end segments and the quality products needing approvals. So because of that, we have been able to maintain and sustain, and we are able to do much better than many of the other players. So this is the situation I felt
right,
that...
Mr.
Yeah.
Right, Mr. Shah. Yeah, right. Point taken. A lot of opportunity opening up for Jindal Stainless SR. But let me talk particularly about your EBITDA margins. They've come much better than expected at about 13.2% for the quarter gone by. But are they actually sustainable? Also, let me add in another question here. So how are you actually dealing with the surge in ferrochrome as well as nickel prices? Have you taken any price hikes?
World commodity market is on fire. As per the World Bank, this sort of increase is still likely to happen. It is not only related with nickel and ferrochrome. You name the commodity, right from the energy to oil to grains and to copper to aluminium and of course nickel and ferrochrome, everything is going up. And it is expected that, as per the World Bank report, that it is likely to continue. So the producers do not have any other option except to pass it on. So that is what is happening worldwide also, and in India also. This is primarily because of the various stages of the recovery of different economies and the pent-up demand and the revival of the overall global economy. So this is likely to continue, and we are part of the situation.
Mr. Sharma, Alex coming in, I just want to get a sense. Now, you've seen a significant debt reduction during the financial year gone by, and with debt currently standing as of March 31st at 1,376, is that a comfortable level, or are you looking to deleverage further?
You see, ideally speaking, everybody would like to have the much better ratios. Our ratios are quite respectable now. In fact, debt to equity and debt to EBITDA, they are much better than the expected ratios. So, but yes, every organization needs to improvise better, and we would like to have a balance.
Just an addendum to that question then, what is the expectation in terms of capex in the current financial year that we're in right now, especially considering the kind of volumes that you saw? You saw an improvement in the quarter gone by as well. And how are you going to fund that? Is that going to be through the cash flows that you're generating currently?
We have already made a commitment to expand our special product division, wherein a capex of about 190 crores has been committed, out of which about 75 to 80% is already been made, and the rest would be by, because the commissioning is likely to happen in June this year, which got delayed because of COVID by a couple of months. But this will help us in increasing the capacity of our precision strips. So this is the expansion plan for SR. And if you are trying, if you want to understand beyond that, I think since JSHL it will be getting merged into GSL, so it will be a part of the larger strategy, which will be definitely shared with the concerned stakeholders in due course of time.
Sir, just want to come in on that. I'm glad that you mentioned the merger with JSL because that will create one of the largest stainless steel makers in the world, the largest certainly in India. Any timelines that you can share with us as to the completion of that merger?
Will be while the appointment date will be 1st of April 20, but the merger should be ready by complete by H2. We are on schedule, and whatever the timelines are being are being followed as per the plan. So we are comfortable with the current status of the merger plan.
All right.
One
All
point
right,
I would
point
like
taken, Mr. Sharma. Thank you. But we leave it at that. Thank you for joining us on. Sorry, continue.
One point I would like to add here, because you see, in today's context, every corporate, and that too a responsible corporate, has a commitment, has a responsibility towards the society. I would like to share that JSHL, despite being a stainless steel company, we have been very, very actively supporting the government. You might be aware that we were having a 580 bed hospital, super specialty hospital in Hisar, in which 200 beds were allocated to COVID and 150 were ICUs. In addition, Hisar has been supplying close to 10 tons per day of the liquid medical oxygen to about close to 50 institutes, medical institutes in and around Hisar. And just on this Sunday, a special dedicated COVID hospital has been inaugurated in the school, OP Jindal Modern School, which is owned by Jindal Stainless, along with the hand-holding of the government of state government of Haryana. So, and plus, our company has also ensured that all the direct and indirect labor and their families, the vaccination has been on account of the company. Plus, whether it is sanitization, distribution of the mask, distribution of food, in all those areas also, Jindal Stainless Hisar is very actively doing its job and also doing the hand-holding with the state government. I thought it would be very appropriate to raise this point here. Thank you.
Thank you, Mr. Sharma. Definitely must commend the corporate India stepping in the time of this dire situation of COVID-19 pandemic. But that was Mr. Vijay Sharma, who is the director of Jindal Stainless Hisar, talking about the earnings, the way forward for the company, saying that a lot of new opportunities are emerging for the industry as well as for the company. All right, but on that note, we'll slip into a break in this edition of Buy Now, Sell Now. But stay tuned. When we come back, we'll get you the high-risk, low-risk ideas from the experts, as well as resolve your queries. So don't go anywhere. Welcome back. You're watching Buy Now, Sell Now on ET Now, and let's get on board our experts for today. We have Kunal Bothra as well as Ashish Kapoor joining us. Good morning, gentlemen. Thank you for waiting by. Time for the high risk and low risk ideas. So Kunal, I'll come first to you. What are the ideas for the viewers today?
Morning, Cheryl, two buy calls which I will suggest for the viewers. The first one is a buy on PNB. I've been maintaining the bullish stance on many of the PSU banks. So I picked up PNB today. Stock on the verge of swing breakout. Buy with a target of 46, so expecting almost a 10 rupee uptick from current levels, and stop loss to be kept at 33.5 levels. And the second is from the low risk category. It's a buy on Cipla. The stock is also nearing a strong bullish flag pattern breakout, so would expect a target of almost 1,000 plus over the near term, suggesting a buy with stop loss at 890 levels.
Morning to you as well, Kunal. We're also joined by Ashish Kapoor. Good morning, Ashish. What are your ideas for us today?
I also have PNB. That would be the high risk category, and PNB basically because of very low valuation. While public sector banks have lagged private sector banks in performance, but the valuation gap is extremely high. And currently PNB is trading at very low valuations, 0.7 price to book and 0.5 market cap to operating revenue. So that's a very extremely low valuation, and also they are going to get a lot of tailwind as a lot of the user industries which were earlier NPAs were in metals and engineering. So with the way the metals are coming back and the industry is reviving, a lot of NPAs are going to recover. So NIMs are going to likely to improve, and with so much of tailwind and such low valuation, it makes sense to buy here. We have a target here of 45 rupees. This is the high risk. The low risk idea is HCL Tech. In general, last 2 weeks, the IT sector has underperformed. HCL Tech in particular, after the bad results, has come down sharply. The present price presents a very good entry level in our opinion. HCL Tech would get good traction going forward due to cloud migration as well as cyber security solutions. They also will get help of the DWS takeover which they have done. Overall, the valuations are still at a significant discount to TCS and Infosys. We believe that 1100 is a target which it should achieve. Currently, it's trading at 15 times 2023 forward earnings compared to 21 and 25 of TCS and Infosys. The valuation gap should narrow to about 18 times, and that would give a target of 1100 rupees. This is a low risk because I really think that HCL Tech would make money either way, even if an investor can hold on for some period of time.
All right, so those are the ideas coming in from Ashish as well. Let's get on board then our viewer queries. And our first query is coming in from Ritesh on YouTube. He's saying that he's bought India Bulls Housing 2020 May call just a few minutes ago. He's asking if there's any breakout or trend reversal that is visible on the charts. Kunal, I'll come to you on for this one. India Bulls Housing 2020 May call.
I think it's 220 strike, May call for India Bulls Housing, but I think it's not a bad trade as such. The stock has just given a breakout today above the 200 moving average and the 50 moving average combined. What has been very, very interesting on charts, is that the 50 and the 200 moving average were just on the verge of giving a bearish crossover. And today is the breakout day for that. So, which means that the bearish crossover may not happen, and you might see the stock moving up significantly higher. So, this pace of uptrend which you're seeing for India Bulls Housing, I think I would just sense that this could intensify. So, I think it's a very good trade, for India Bulls Housing. Probably if you can just carry forward this to June or roll it over to June, I think then it could be much more beneficial, because then you'll have a buffer of not just 5 or 6 trading sessions but beyond that as well. I think it's a good strategy to hold on to India Bulls Housing. Even on the cash front, if you can try and take some advantage on the cash side as well, I think you can get some decent short-term returns into the stock price purely on base of momentum.
Right, I stand corrected there. Thanks, Kunal, for pointing that out. India Bulls Housing to 220 May call. Sorry, I stand corrected there. But Alex, which is the next query that you have?
Well, this one's on Britannia. It's actually a stock that is in focus today. It's down over 2%. But Danny Verghese is wondering whether to get in at the current market price for the medium to long term. So I will come to you on this one, Ashish. Would you use corrections like the one that we've seen today, as well as I think over the last month or so it's down about 7.5%? Would you think that that's a good opportunity to accumulate the stock?
Yes, I would think so. I think the company is doing fairly well, and also in a very safe spot, which is the the regular consumption items. Over the last few years, the company has got re-rated because of continuous improvement in revenues as well as operating parameters. The company, I think, would continue to deliver 15-20% returns regularly going forward. So I think it's a very safe and a good stock for anybody to have in one's portfolio, and certainly these declines can be used to add this to your portfolio.
Our next query is an email query coming in from N. Sankar asking about South Indian Bank. He's saying he's holding 78,000 shares of South Indian Bank that he's bought at around 7 rupees odd levels. He wants to know for how long can he continue to hold on to this particular stock. Ashish, what's your view on South Indian Bank?
Positive. I think the way now we are poised to recover once the COVID scare gets over, the economy is likely to get a lot of tailwind. So that would benefit a lot. That will be a big benefit for these smaller banks going forward. So I think South Indian Bank is got it at a very good rate, 7 rupees. Continue to hold on. I still have a buy here. I think that we could easily look at about a 15-16 rupees on this in time to come. So certainly, if you have time with you, stay invested. It's still a very cheap. It's very, very cheap stock available at a very decent valuation, and with the expectation of traction coming in economy in large, I think these banks are likely to do very well going forward. So stay invested and keep a target of about 15 rupees on this.
Okay, we're talking about Cadila next. Kunal, I'm going to come to you on this one because it's an options question. Sherry's got in for the June 670 strike call. Sherry's asking whether this value will erode over time.
I think it will, it should erode over time, because what has been happening is, there was a period of very strong and steady uptrend for Cadila from 400 levels to 650 levels. Now these pharma stocks are you have to understand the behavior of stocks and sectors whenever you're looking at punting or betting on the options front as well. That these are not stocks which are highly prone towards consistent periods of high trending. These are stocks which will go through a run up for a short duration of time, and they would take a prolonged bit of pause. So you have to be very, very careful with the kind of out of the money call options when you buy into these stocks, because if you buy it way out of the money, like a 10% strike or 7% strike higher from current levels, then it's possible that you would go through a time erosion, specifically if you're looking at it as a June expiry. So I would suggest that relook at your strategy. If you're looking at something on the very short term, then I would suggest something on Cipla, maybe a 950 call for the month of June or 960 call for the month of June. I think it's worth something you can look at specifically from a short term trading view.
All right, our next query is coming from Balan. He wants to talk. He wants the view on PSU insurance company like GIC and New India Assurance. What's the take on this particular on these counters? Because he's holding both of these stocks, so he wants to know whether it makes sense to stay put or sell these counters. Ashish, what's your view coming in on PSU insurance company like GIC and New India Assurance?
Certainly bullish on LIC, LIC housing, one more insurance. I'm generally bullish on insurance companies, and I think the public sector insurance companies would also fit in the bill. But I really haven't tracked GIC lately, but overall the sector outlook is bullish. But in GIC in particular, I haven't looked at it lately.
GIC Housing Finance, GIC Re. All right, I just want to point out that it's not, so you may see the tickers on the screen, that's LIC Housing Finance, but it's actually GIC Re that we're talking about, the reinsurance company that Balan wanted to know about. All right, and we have, Balan, spoken about private sector insurance companies in the past, and I think a lot of our experts have pointed out that they are positive on the insurance sector as a whole. Let's take another question. This one is from Shanmuga Sundaram, and Shanmuga is asking about Alembic Pharma, which is currently trading about a 0.6% in the red right now. Bought 45 shares at levels of 955. Kunal asking whether he should hold on for another 6 months.
Well, you can hold on for another 6 months. I think it's not a bad bet. The stock is consolidating. For last 4 months, from February start or January end, the stock had come back into this grinding range. 918,000 approximately is the pivot range or pivot point for the stock. And you see the stock moving up 50 rupees higher or I think 100 rupees lower. So that's been the moderate range for Alembic Pharma. So it's a stock which is consolidating. I think it's not a bad bet that you have a time frame of another 6 months. So I think given the next 6 months, there is a strong possibility that this consolidation may get over soon, and you might see the stock getting back on the course of moving up higher, say back to the levels of 1100, 1150, which it used to trade, I think a quarter or two back. So I think at 955, it's a good bet. You can hold on to your investments and look out for 6 months to 9 months target frame of approximately 1050 to 1100 plus.
All right, our next query is coming in from Santi, talking about Shobha, saying that they've bought 100 shares at 447 rupees per share. The management had said that they saw strong sales as well as collections, and because of that, he saw the stock price also rise to about 550 odd levels. But you can see that the stock is now down from those levels. Wants to know that in anticipation of good FY21 results, is it good to increase the position in Shobha and aiming for a target of around 550 to 600 rupees per share? Ashish, what's your take on Shobha? Are we expected to see a smart uptick coming in this stock, given we are going to see good earnings for FY21, as March sales were definitely good for Shobha?
Well, I'm quite bullish on the real estate sector as a whole, because I think the correction here has been pretty long now. I think it's time, for the real estate sector to start coming back and start gaining traction. In particular, Shobha is actually quite a good player, very well managed. Even in these difficult times, they have managed to put up a very good performance. So as things improve, I think this would certainly lead the way up. So Shobha, certainly a very good idea within the real estate space, one of the much better managed companies. So yes, target would be achieved around 600, is easily achievable. So I think the investor can stay invested. It's certainly a good stock, and he has managed to buy it at a good level.
I'm going to come across to you, Kunal, and hopefully you have a view on this counter. Amrutanjan Healthcare, it is a counter that has seen a gain of 19% over the last month, currently trading at just around 738, 739. We've got Sagar, who's bought at levels of 350 to 360 and asking whether he should book profits at this point. I think it has been established over the past several days that Sagar has made quite a few good bets and is making quite a bit of money. So, Sagar, if you want to buy me a cup of tea sometime, you're more than welcome.
Well, yeah, absolutely. I think Sagar has done phenomenally well. I keep, seeing the queries from him as well. So phenomenal job, Sagar, yet again. I think he's done fabulously well. Managed to hold on to a stock, and I think the rewards are pretty clear in front of you. The stock has more than doubled from your, purchase price. But I think the question now is very, very interesting, because whether to book out profits over here or whether to try and ride the journey going forward. So it's going to be always tricky to try and look at this, because what the short term and the medium term charts indicates for a stock like Amrutanjan is a very strong trending breakout move. Now the concern is that how long and how strong can the trends last for a rather a higher duration of time. So from, look at it in the last 1.5 or 2 months, from 450, 500 levels, it's moved up to 750. So it's a rally of almost 50% in just a matter of the last 1.5 odd month. Now, whenever you typically see such kind of rally, there's always a concern that maybe you might see some sort of a pause or corrections. But those are specifically, for individuals who bought at slightly lower levels and then are just about in the money. Since you bought at much lower levels, I would suggest a hold. And even if the stock corrects and say comes back to 600, 650 levels, I think that's still a very strong support zone for the stock, because what this move has done for Amrutanjan is to try and set the tone higher for the next couple of quarters and the next couple of years as well. So I would suggest the hold, specifically if your time frame is long term.
All right. The next query is also for you, Kunal. This is coming in from Pavan Kumar. He's saying that he's eroded 60% of wealth in Reliance May 2100 call. He's asking, should I save the residue wealth by exiting?
It's a better strategy to try and exit the stock. It's trading in a band, and this is what I was indicating previously as well, that for you to try and buy a call option, you have to wait for the stock to just about nudge towards a breakout. Now for Reliance Industries, the stock has been taken a lot of resistance at the 2050 levels. It's still below the 200 moving average. So you either have to wait for a pop to happen where the stock breaks out the resistance on price, or it breaks out of this 200 moving average resistance. Till now, the stock is not showing any kind of signs. And when you generally don't see any signals, which means that the stock is lacking momentum. And in a momentum lacking stock, I would not advise buying call options. So I think it's a prudent strategy to try and exit over here. Since you've already seen an erosion of more than 70% of your premium, I would suggest that preserve this remaining capital and then wait for the stock to cross that 2050 hurdle or the 200 moving average to try and take position back again.
Okay, Ashish, I want to come to you on this next one. It's a bit of an involved question, but you don't need to go into too many details. Perhaps if you can just give a general view. Rajiv's asking about his investment in stocks that are either metal counters or related to metal. So he's got Graphite India, HEG and Mishra Dhatu. He wants to exit one of them and add another stock in the metal space, perhaps one that focuses on copper or aluminium. What would you suggest?
Hindustan Copper, and generally yes, metal cycle should continue doing well, and I don't have any doubt that in over a period of time he'll make money. Mr. Dhatu also is looking very good, certainly hold on that. Now both HEG and Graphite are very similar kind of stocks, they both have a similar product line, so I think he could book one of them, possibly the one in whichever he's making more money. So then that way he would have a steel ancillary, which is a graphite stock, Mishra Dhatu, which is a mining stock, and also Hindustan Copper, which is a copper stock. So that would be a little more diversified and well-balanced portfolio.
All right, our next query is coming in from Joby. He's saying that he's holding V-Guard, which he bought at 50 rupees per share levels. He wants to know whether he should continue to hold or should he go ahead and sell the counter. What's the take on V-Guard, Kunal?
It's a good chart. The breakout is still yet to happen for V-Guard. I think 260 or 265 thereabouts is the breakout point for the stock. So you can hold on to the stock. It's just about consolidating. Wait for that breakout to happen, and then I believe that you could see a much more bigger move coming out in the stock over the next few quarters whenever the breakout happens for the stock. So I think you should hold it patiently, specifically waiting for the breakout about 260.
I mean, Kunal, he's been patient so far, right? He's been holding for quite a while and he's made quite a bit of money on this trade. Let's go across to Padma's question then. We've got Padma asking a question about Borosil Renewables, bought at levels of 284. Should you hold or sell is a question. Ashish, come to you on this one. On the fundamentals, do you think it's a hold?
It is. I think the company has very bright prospects going forward, and certainly the investors should hold on. Difficult to put a target on these kind of growth stories, but certainly try and hold it for as long as you can. The story has just about started, so it's a long way to go here, and I think the stock has a huge upside potential over the next few years.
All right. This question is coming from Seems Kumari, saying that should bought Tata Power at 112 rupees per share. Wants to know what sort of target can she look at with the next, with keeping in mind the next 1 month. Kunal, what's your take on Tata Power? How are the charts looking for this counter?
Well, I would advise that don't look at stocks like Tata Power just for the next few weeks or 1 or 2 months. I think these are very top quality names, and I for one believe that Tata Power has given a multi-year breakout, almost a 13-year breakout. Now for a 13-year breakout to pan out, you can't have a time frame of just few weeks and months. So first of all, tweak your time frame and look at it as specifically from a longer term view. And also, I think on the other hand, since you bought at slight higher levels, I would advise that use these strategic corrections which happened to the stock price from your cost price as good averaging opportunities. I think closer to 96, 98 could be a first level where you can look to average. And if the stock happened to come back to say sub 90 levels, I think that's another level for you to look to average further. I think it's a top quality stock given a very strong and a solid breakout, almost a 13-year breakout on Tata Power. I would suggest the hold specifically and increase your time frame from a couple of weeks or 1 month to at least another couple of years.
I would encourage you, gentlemen, to keep your answers a little shorter. We'll try and fit in as many as possible over the next couple of minutes. I want to start with HEG and Graphite. I know we took a fundamental view, but do you have a very quick technical view up to Deepavali is the question, Kunal?
Both of them are exceptional stocks. I do track these stocks quite occasionally. I've been recommending on channel as well. I think both these stocks are quite well. and look at this as specifically from a longer term play. These stocks have come back to a consolidation zone. So buying at current levels, for example, HEG at 2200, 2240, where it's trading currently, I think seems to be an attractive buy level, specifically if you're in for slight high beta as well as from a longer term view.
Next query is coming from Jacob on Kansai Nerolac. He's bought 434 shares at 567 rupees per share. He wants to know what's the outlook looking like for Kansai Nerolac. Ashish, how is Kansai looking like? Outlook bright for this paint company?
Generally, I think the paint companies have been doing pretty well, but my take on this would be that, I mean, the company which I quite like now, which has not done so well as Asian Paints, is Berger Paints. So if I have to choose a paint company to invest in now, it would be Berger Paints. So that would be my pick. Having said that, if the investor still wants to remain invested in Kansai Nerolac, I think certainly can stay invested. But Berger Paints would be a better option to stay invested in.
Okay, Kunal, coming to you for this next one. Rajan's asking about the short-term prospects for ONGC on the charts.
The short-term prospects for ONGC would depend that when and how the stock will break past above that 120 mark. I think a breakout above 120 is what you should be waiting for, and whenever that breakout happens, I think that's where you might see the stock going into a different range altogether, moving up from 60 to 120 as a range to what I foresee as 120 to 180 on the upside. So I would say that wait for a breakout. If you want to anticipate a breakout and take an initial trade, that's up to you. But then I would suggest that wait for a breakout above 120. That's where you will get. There is a probability that you will get a much more higher return into a stock like ONGC.
All right, and that was the last query for today. Thank you, Kunal, as well as Ashish, for joining us on the show, giving us your picks, as well as resolving the viewer queries. And on that note, we'll slip into a break in this edition of Buy Now, Sell Now. But stay tuned, more on the other side, so don't go anywhere.